Welcome to the October 11th, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it gives subscribers an idea of how we like to set up our charts, what indicators, and what time frames we use as well. The S&P 500 closed right at the 50-day moving average and above the 5-day MA, and it did so about 4 sessions ago and immediately failed. So we'd like to see how the S&P holds up versus the 50 MA over the next few days to give us a better idea of where the market is headed over the next week or two. On the Nasdaq Composite, it's not above the 50-day MA, but it's back to the 50, and it's also back above the 5-day MA, which is now rising. That's this pink line here. So the past few touches of the 50 have all led to immediate rejections. Again, we're just looking to see how the price reacts to the 50 MA this time. Maybe there's a change of character. And for small caps, we have IWM. So far, this big reversal here on 10.3 is held, which is a good sign. And the price is attempting to put in a higher low here if the low from 10.8 is able to hold. MDY pretty much the same thing. It is also held above the 10.3 reversal bar, which is a positive sign. Let's see if it can get back through the 250-day and 20. All these moving averages are clustered around the 344 to 348 area. And the last index we're going to look at is the IBD 50 ETF. Also had a bullish reversal candle on 10.3. What we're really just looking for in this ETF is the price action to hold above 32, chop around, then eventually break this downtrend line. And this ETF just gives us a good idea of how growth stocks are performing in the market. So we're still basically in a wait and see mode with regard to the indices. If they can hold above the 50-day MA, the S&P and the Nasdaq can, the market might be ready to start showing some signs of life next week. And let's move on to current open positions in the model portfolio. We have one in floor and decor, FND. And the reason for entering was the false breakout that led to a pullback to the 50 MA with a decent little reversal candle here on 10.3. Our entry was over the high of 10.4. But so far, pretty much just a chop fest since we've entered. All right, let's run through a few charts that we're looking at for potential entries next week. Just some stocks that have held up really well while the market's been weak. First up is MODN. Just a really tight base here. This is the weekly chart, a flat base, really tight action near the rising 10-week MA. If this week's price closes around this area here, a move above the 2-week high could serve as an early entry point with the stop beneath the 2-week low, which is about a 7% stop. UEC, which was a long for us a few weeks ago, triggered above 46.55. We sold it into strength for, I think, a 10% gain. It's pulled back to the 20-day EMA, just above the rising 10-week MA here on the weekly chart. But what we're looking at is a break of this downtrend line, which would probably put it back above this 2-day high here, at least 49, I guess. That could potentially be back in play for a swing. COUP sitting near all-time highs. A lot of volatility on the weekly chart. Tough to argue against the price action, though, almost ready to break out to new highs. The relative strength line is already broken out ahead of price. Just tough to find a low-risk entry point if the market was strong, and even more difficult when market conditions are not ideal. ZYXY, pretty volatile breakout, pullback on heavy volume, but the volume is lighter than the breakout volume. Really like the dry up in volume today, combined with the NR 7-day inside day here, very tight. If it can clear today's high on Friday, say 11:45, it could potentially be in play for a quick pop-up back to the range high. GSX is a Chinese education stock that's really tightened up after pulling back to the 50-day MA on light volume. Also could be in play above 1470, 71. That would be about a 10% stop though to this reversal bar, but it is a lower price stock, so and pretty volatile, so a 10 to 12% stop in these type of setups isn't out of the ordinary. AMKR, here's the breakout on a pickup in volume. 2-day pullback on lighter volume. Inside day yesterday with the false move out. So this is a false breakout today. So normally, if still interested in this stock, I'd put a new entry point above the high of 1010. The protective stop could either be placed at the 2-day low, or I'd probably go with the 3-day low. It's not much lower, 3%. Then we also have Docu, which isn't viable right now, but it's held up really well, showing a ton of strength. And another stock we're looking at, but nothing to do right now, GNRC. Beautiful move up on just monster volume. Nothing really to do here. We'd like it to hold above the 83.45 level though. At some point it's going to have to pull back or allow the 10-day moving average to catch up, and we'll continue to monitor this stock for a buy point down the road. Okay, that's a wrap for tonight's video. Thank you for joining me, and we'll see you back next week.